When you look at Bitcoin's growth over the past 15 years, it's been growing more than 100% a year for the first decade or so, and for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like three times the volatility of the S&P and three times the performance of the S&P index.
Okay.
Over the next 21 years, I think it will grow. It will grow faster than the S&P, and it's going to grow to the point where.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. The inherent volatility of Bitcoin has consistently been perceived as a dual-edged sword, presenting both challenges and opportunities in the market. For investors with a long-term perspective, the fluctuations in the asset's price offer considerable opportunities for strategic advantages while enhancing financial stability in a progressively digital economy. This perspective is prominently supported by Michael Saylor, the CEO of MicroStrategy, a recognized proponent of Bitcoin and a leader whose organization has methodically amassed substantial Bitcoin assets. Saylor highlights the significance of adopting a proactive strategy when investing in Bitcoin, contending that its historically recorded 50% annualized volatility serves as a driver for market expansion instead of a hindrance. Saylor highlights Bitcoin's distinctive combination of characteristics, its strong liquidity profile, its potential for economic growth, and its capacity to serve as a stable store of value in the face of geopolitical tensions and evolving political environments. This resilience positions Bitcoin as a compelling investment choice, especially during periods of economic or political instability. The performance of the asset highlights the rationale for its integration into diversified portfolios, particularly for investors aiming for uncorrelated returns and protection against conventional market volatility. Saylor's investment thesis fundamentally revolves around analyzing the risk-return dynamics of Bitcoin in relation to traditional investment vehicles. The historical average return of Bitcoin stands at 50% annually, accompanied by a volatility rate of 50%. This performance is notably different from the S&P 500, which generally offers returns in the range of 12 to 14% with a volatility of approximately 14%. Although this increased volatility may appear daunting at first glance, Saylor positions it as a tactical benefit. The assertion is made that Bitcoin's volatility contributes to increased liquidity and a steady stream of traders and investors, thereby reinforcing its market dynamics. Saylor emphasizes the importance of a disciplined strategy regarding time horizons for investors evaluating Bitcoin. The asset's continuous trading capabilities and robust liquidity, maintained even during weekends and off-market hours, significantly enhance its attractiveness. The continuous availability of Bitcoin enhances its function as a source of immediate capital, a characteristic that is not commonly found in traditional assets. MicroStrategy's significant Bitcoin investments have illustrated a synergistic connection with financial instruments such as ETFs, which offer a wider range of market participants direct exposure to Bitcoin. Saylor observes that the interplay between direct holdings and financial instruments, such as ETFs, enhances market demand and facilitates price growth, primarily driven by Bitcoin's constrained supply. And lots of things Michael Saylor discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Yeah, we created a model which we uploaded to GitHub. It's in the open source community. It's called Bitcoin 24. You can just Google it and go grab it. It's an Excel spreadsheet, and it has macroeconomic models for the next 21 years, a Bitcoin forecast for 21 years, and then micro models for corporations and individuals and institutions and even nation states. And once you download that model, you can plug in your own assumptions about what you think is going to happen, and you can come to your own conclusions. But my assumptions are the U.S. dollar supply is going to continue to expand about 7% a year. and that is the historic rate of expansion of dollars for the past 100 years. That's how I arrive at that. That's just how fast the money supply is expanding if you look at M2. And I think that there'll be innovation from AI. So some things like equities will probably grow a little bit faster because AI is going to have a boost to equities. I think over time, gradually, technology is going to demonetize gold and some of the other stores of value assets that were used in the 20th and the 19th century. But the 21st century, we're going to digitally transform property and transform gold into digital property, digital gold.
Okay.
And when you look at Bitcoin's growth over the past 15 years, it's been growing more than 100% a year for the first decade or so, and for the last 4 years, it's been appreciating about 50% a year in ARR. I think it's 50% a year in ARR, and it's 50 vol, which is like three times the volatility of the S&P and 3 times the performance of the S&P index.
Okay.
Over the next 21 years, I think it will grow faster than the S&P, and it's going to grow to the point where it's about 7% of the world's assets. Right now, it's about 0.1% of the world's assets. And I think that it will gradually approach, but it will never be as big as the S&P index or equities. It won't ever be as big as real estate. But in that world where it decelerates from 50% down to 20%-ish, it will appreciate from 65 or 70,000 up to 13 million a coin in my base case. And that amounts to about a 29% ARR on average over the 21 years. And when it's half the size of the S&P, it'll still be twice as volatile, probably performing 50% better, because it's a 24/7, 365 asset. It's subject to global chaos and global capital flows, and it doesn't have all the risk factors of property or the risk factors of equity to hold it back.
MicroStrategy, recognized as the largest corporate holder of Bitcoin, has recently executed a transfer of 1,652 BTC to a new wallet, an action that has captured the attention of market participants and traders. The data provided by LoonChain on X indicates that the transfer occurred around 10 p.m. on Friday. This development is significant, given that MicroStrategy currently possesses a total of 252,220 BTC, which is valued at around $17.56 billion. The organization has determined its average acquisition cost at $39,266 per Bitcoin, leading to an unrealized profit estimated at approximately $7.65 billion. This unforeseen Bitcoin transfer is in strong alignment with MicroStrategy's recently unveiled strategic framework, the E2121 plan, which outlines a comprehensive approach for capital raising over the upcoming 3 years. The company has set a target to secure $42 billion, with an equal distribution of $21 billion allocated to equity and $21 billion to fixed income securities. This capital raising strategy is anticipated to enhance MicroStrategy's ongoing objective to acquire more Bitcoin, solidifying its status as a prominent institutional entity within the cryptocurrency landscape and aiming to generate substantial returns on its Bitcoin investments. In the most recent Q3 earnings report, MicroStrategy disclosed a significant $2.1 billion rise in equity and debt financing, enhancing its balance sheet and facilitating the purchase of additional Bitcoin. The recent capital infusion resulted in an 11% growth in the company's Bitcoin assets for the quarter. The company has demonstrated a year-to-date yield of 17.8% on its Bitcoin investments, highlighting its capacity to leverage market trends and effectively manage volatility for optimal returns. In conjunction with its capital growth initiatives, MicroStrategy successfully realized a $24 million decrease in its total annualized interest expense, indicative of effective financial management strategies. The overall performance of the cryptocurrency market has exhibited variability in recent weeks. Bitcoin, the leading digital asset, fell beneath the $69,000 threshold at the beginning of November, prompting traders to take profits and leading to considerable liquidations. Nonetheless, in light of these transient fluctuations, Bitcoin's overall performance continues to exhibit strength. Currently, Bitcoin is priced around $69,500, reflecting a 3.86% appreciation in the last week and a notable 13.71% rise over the preceding 30 days. Furthermore, Bitcoin has experienced a remarkable increase of 96.77% since November 2023, highlighting its robustness and ongoing appeal to investors. Bitcoin is presently valued at a 5.8% discount from its peak of $75,350, indicating both opportunities for appreciation and associated risks. The current price dynamics place Bitcoin within a framework characterized by strategic potential and significant volatility, highlighting the critical need for precise timing and a long-term outlook for investors. MicroStrategy's strategic approach highlights a significant trend in the corporate and institutional investment arena, where firms are progressively recognizing Bitcoin as more than a speculative asset, but rather as an essential element of their capital allocation strategies. This trend indicates a change in financial perspectives as companies explore options beyond conventional asset classes due to ongoing fiat currency depreciation and broader economic uncertainties. MicroStrategy's strategic approach to capital raising and its ongoing acquisition of Bitcoin demonstrate a strong commitment to sustaining and enhancing its market position. As the organization persistently allocates capital with precision, market analysts are expected to monitor its actions closely, interpreting them as an indicator of overall institutional trust in the cryptocurrency industry. The ongoing growth in Bitcoin holdings, coupled with the company's effective capital management, may serve as a model for other corporations considering the incorporation of digital assets into their financial frameworks. Let's get back to Michael's Saylor interview.
Yeah, well, I mean, first of all, Bitcoin's like 50 vol, 50 ARR, and the S&P is more like 12 to 14 ARR, 14 vol. So if you want 12 vol, 12 ARR, you would just buy a diversified equity index. You'll get 1/4 the return. You'll get 1/4 the volatility. And some people like that. If you're going to buy a 50 vol asset, first of all, you shouldn't buy it unless you're going to hold it for the long term. Like a short period of time to hold it is 4 years. A middle period of time is 10 years. The right time horizon is the rest of your life. If you have money that you need to give to your children in 4 weeks, don't buy Bitcoin with it. If you have money you want to give to your children in 40 years, definitely buy Bitcoin with it. In 40 years, Bitcoin is going to be worth a lot more. In 4 weeks, there's no telling what it'll be worth. So think in terms of 0 to 4 years is very safe conventional assets. Think in terms of 4 to 10 years is more like investment things. And think beyond 10 years is that's something I'm buying to give to my great granddaughter, that it's going to be in the family for ever. It's like the center of London. It's been passed by the royal family of London down from family to family for 1,000 years. That, if you think of it like that, then you'll go into it with your eyes wide open.
Makes sense.
The volatility is a feature. It's not a bug. The reason it's volatile is because on Saturday night, if you panic and you needed to raise $1 million by selling $1 million of something you own, it's literally the only thing you can sell. You can't sell
That's
anything
true.
else. You can't
That's
sell
true.
your real estate. You can't sell your Apple stock. You can't sell your
That's
car.
so
There's
true.
nothing else you can sell. So if you can't sell it, then by definition, it's not going to be volatile because it's useless. So things that are non-volatile are useless. The volatility is what attracts the Bloomberg jockey to put up $20 billion of capital in Singapore. And that person will loan you $1 billion for 5 minutes on Saturday night at 100x leverage if your life depended on it. And you can imagine that, is that a feature or is that a bug? It's just a lot of economic power. And the fact that there's that much economic power in the network means that it attracts all of the traders, and it attracts anybody that wants to either buy or sell with leverage at any time, anywhere in the world. Once you embrace that idea, you realize that if you wanted to buy it knowing what it would be worth next Tuesday, you're a fool. But if you wanted to buy it thinking this is the most powerful digital capital network in the world for the next 100 years, and I've got a long time horizon and I just want to get rich and I'm going to hold on to it, then it's a pretty wise thing to put in your portfolio.
Cryptocurrency has developed into a dynamic asset class that has garnered significant attention in recent years. Investors should evaluate the various compelling factors that support the inclusion of cryptocurrencies in their portfolios. There is an increasing focus on the capacity of digital currencies to disrupt or potentially supplant conventional fiat monetary systems moving forward. This opportunity has garnered interest from investors who perceive cryptocurrencies as a progressive investment that is in sync with a digitally driven global economy. The potential for digital assets to become integral to future financial systems enhances their attractiveness as a forward-thinking and tactical investment opportunity. Secondly, cryptocurrencies have the potential to function as an alternative asset class, akin to art or collectibles. Expanding a portfolio to include non-traditional assets beyond stocks, bonds, and cash can yield distinct benefits, particularly for investors aiming to mitigate risk while pursuing greater potential returns. Although alternative investments may exhibit increased volatility, they provide non-correlated returns that have the potential to improve portfolio performance in the long run. Nonetheless, a significant hurdle for investors lies in determining which particular cryptocurrencies to acquire. The digital asset market exhibits significant breadth, with Bitcoin and Ethereum emerging as the most prominent and well-regarded choices within this landscape. The leading cryptocurrencies have shown a degree of stability, increased adoption rates, and notable utility in various applications. Investors might consider the potential for smaller, more speculative assets like Dogecoin or Shiba Inu to develop significant real-world utility moving forward. These alternative assets frequently attract interest due to their viral nature, yet they are associated with elevated risk and unpredictability. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.